Good morning.
Hi, so
Hello.
nice to meet you, Chris. Thank you. You're joining us today on our 200th broadcast of the Live Analysis Room. I bet
Oh,
you feel
wow.
real
That's
special now, right?
I absolutely do. 200, a very nice anniversary.
Thank you very
Congratulations.
much, Chris. I read a little bit about you. You've been trading for 10 years. You've embraced fibs and Elliott Wave in your analysis. But I'd like to start from the beginning. How did you get involved in the trading business? Who were your early influences? And did you blow up your first account?
Good questions. I actually was introduced to the world of Forex through my father, who was an international sales manager and was always influenced by his sales and his income because of the influence of the dollar. He was trying to sell machineries to the Middle East and Africa, and if the dollar was strong, it was difficult to sell. If it was weak, it was a lot easier. So it always
Interesting.
kind of caught my interest, indeed. And well, 20 years later, I guess, starting as a teenager, I got a bit of interest in that, and here I am.
Okay, well,
So, of course, the path was a bit longer than that,
oh,
indeed.
sure.
But
But what a great
yeah,
mentor to have, that your exposure to it and learning the importance of your father's livelihood being dependent upon currency fluctuations that
yeah,
drove you to try and understand them. So that's really a great
yes, yeah.
story.
Yeah, indeed, exactly. It was definitely the curiosity, like how is there a way indeed to have an idea what would be the next happening or the next movement, indeed. Yeah,
Well, yesterday was definitely
exactly.
filled with excitement. The biggest range day we've had in a while. Perhaps you could share your screen with us, Chris.
Yes, let me do that, indeed. That's a great idea. Let's see.
So you've been at it for 10 years. What is your title and responsibility at Admiral Markets? And are they out of Prague like you?
Let's see. I am actually an analyst, as in terms of the Elliott Wave analyst that I do every day in the
Hmm.
morning for Admiral Markets. But I myself am primarily a forex trader, and while I do the webinars with them, I have a live trading room. Not the same time though, so no conflict of interest there. It's in the London morning. We take a look at the markets together for an hour or so. So that's great.
You do most
I'm
of your
just
trading in the London session. I've noticed that a lot of major reversals take place during the European session. A lot of people actually move geographically so they could trade the European session.
Yeah, there's definitely a lot more movement in those sessions now. That could be negative or positive depending on how you trade. But there's definitely, if you look at the stats, certainly more pip movement in the London and New
All
York
right, so
session,
you're
first
having
part of the New York session.
difficulty sharing your screen?
Well, actually, what I didn't realize, indeed, let me just take a quick look
All right,
here how that
you
looks
scroll
on
to the
the.
bottom and there's a plus sign, the icon next to the
I
red
think
phone.
yes. Last time I shared the screen actually through a different PC. Maybe the best would be just to use that PC again. So I will just quickly call you on the other PC because that will be without any
Okay,
problem.
I'll call you back in 30 seconds.
Great. I'll be ready in
Okay,
two
I'll call you
seconds.
right back,
Good.
Chris.
Yeah. Yeah. Hello there. Do you hear me
Yeah, I hear
properly?
you. It's clear.
Good.
You
Good.
know,
Good. So I'll
this
just
is live TV, buddy. You know,
yeah.
so what I like about things that are live, uh, the human part of us shows up, and that we're all fallible and make mistakes. And here's your shot for your big interview, and you're on the wrong PC.
Well, it was actually a good PC, but what the thing was that there's a different version of Skype on that
Okay.
had been maneuvered, and I realized
Okay.
actually.
So
So
interesting look here. What is the significance of what I'm looking at, and did you have a trigger after the Fed to get short euro?
Well, actually, it was looking like a triangle indeed. I mainly use, as you said, wave analysis, Fibonacci levels to indicate turning spots, major supportive resistances. But if you look at the hourly, there was a potential for both ways, in my opinion, for the currency to move out. And depending on which side was going to be
Right.
broken, and if we look at this classical chart
Yeah,
pattern,
it was
we can
perfectly
see that,
neutral into the Fed.
yes, absolutely. So we can see that the Fed decision drove it down. And it is interesting, though, to see how the announcement, despite the announcement, actually price did stop at the minus 272 target right here and now lingering around the minus 618. That's what I love about Fib retracements and Fib targets, in fact. They do a good job, for me at least, in indicating where currency could head towards, roughly
Right.
speaking.
So yeah,
So
you use them for targeting objectives or more for entries. Both.
I love the targets, both, in
Okay.
fact, yeah. But the targets are really something I admire the most, in fact, if I had to choose. Depending on the wave analysis, sometimes a fib retracement level has probably a bit more preference than the other, indeed.
Okay. So here we are with a pretty negative week in the euro and pretty negative 2 day session here. Is this a trend change or just a counter trend move in the euro? What's your work telling you?
I'm still betting on the counter trend. I was already thinking at this spot that there could be a bit of a retrace for more upside. The fact that the Fed has indicated, of course, the interest rate potential hike 6 months, where kind of like a zone where they can think about it. I don't know if that really changes things as yet. I might consider a different take on things if we break through these daily bottoms here and break support. From this perspective, though, if you look at the daily support, would expect still a potential bounce above these green lines. And if you look at the weekly chart or even monthly, we can see we're in an interesting area because we have this trend line coming in, indicating resistance. And if we then zoom into the weekly, we can see actually price action above it. Is this a false break or is this actually a hook back from our upside? I'm still thinking about the second. If you put a fib on, I'm using a lot of fibs, as you can see. I'm using fib on this one. You can see we stopped at the 61.8. Price is trying to break
Right.
through. And in that case, the next resistance could be the 78.6 at 143. And that could be maybe a major turning spot, maybe later end of this year, maybe beginning next year, something that could happen. I mean, the timing is, of course, very difficult to
Okay,
say.
well, that's an interesting look, and I think it's possible. The only thing I'm skeptical about is that when breakouts give you a chance to do something a week later, they're making that test of a breakout at times too convenient. Normally, if you
Yes.
get a breakout, it should never look back. Too many
Yeah.
opportunities. It's like Mr. Market is saying, "Okay, Dale, you missed a breakout of a monthly channel line and weekly channel line 2 weeks ago, but because you're such a nice guy, we're going to let you buy it at the breakout or cheaper."
Yep.
So I
Yeah,
mean,
good point.
that's my
Good point.
jaded outlook on it, but I can also see the case that this could be just a temporary pullback, and there's another bout of dollar weakness to come. So to me, it looks like 36.30 or so might be the line in the sand. Is that the way you see it?
Yeah, it's a rough indication indeed. If that level would be broken, we could see maybe a bit more bearishness in the long term, at least. This trend channel gives a pretty good idea as well. I mean, it's not like instantly I would immediately sell at that level if we break that level, but I would rejudge and rethink about the long term picture indeed. Most of the time, my trading is done anyhow on long or shorter time frames, I should say, around the hourly. Is my favorite time frame, in fact. So,
Okay, so you do a lot of intraday, 1, 2, 3, 2 day position type swing trading off
yeah.
hourlies.
Yes, exactly. They're mostly intra-week, varying from a day to maybe 5 days. Is most common for me, for my trading,
Okay.
indeed. Yeah. Today I took actually in our live webinar at Admiral Markets where we have this hourly session in the mornings. I took a scalping trade, some small trade actually on the pound dollar, but it was not something I really do day in, day out. It was just more exception.
Okay. So you're a technician. As a technician, are you worried about what's happening in the Ukraine, which is completely fundamental?
I am a bit, definitely. I hope that this will not spiral into a conflict that both sides or any side or any part of the world probably want to avoid. So that is definitely concerning. And I think that everyone agrees that this kind of disruptions to people's livelihood is at all costs people want to avoid.
More than livelihoods, lives.
Lives.
Yeah, their
indeed.
lives. So with all of this going on, last year the star was U.S. dollar yen. There's still a lot of U.S. dollar yen bulls out there looking for a weaker yen. What's your work saying here? Because the yen is the basis for a lot of carry trades, risk on, risk off trades. What are you seeing with your work here?
The dollar yen indeed was
get me out of the way.
A great trade. I just move you a bit lower if you don't mind there.
Yeah, there you go. I like that.
There you are.
I like that.
Got a good vision there, don't you? Was definitely looking for continuation of the dollar yen myself. After this breakout of the triangle,
Right.
was a trade that was very pleasant to, was very nice trading to the upside. Expected a retracement to 38.2 or 50 fib. And a bounce, but the bounce is taking long, it's taking slow, and slowly but surely losing interest, in fact, in this particular setup. And I'm on the sidelines at the moment. I think if the 50 fib is breaking, then this entire setup is already looking differently than I imagined. I thought a wave 4 could take long, it can be drawn out, it's a bit longer than I expected, so waiting for a break probably of roughly a triangle like this to indicate what the longer term direction could be.
Okay, so a measured move would be about 400 pips under the bottom triangle line, and that gives you a 97-ish target.
Yes, a break to the downside. Let's take a look. Roughly, indeed.
That's an interesting looking
450,
pattern.
yeah.
It almost looks like the euro did before it broke down.
Yeah.
Okay, we were in a triangle then. So yeah, it's
indeed,
fine to be
indeed.
neutral. So I guess what would change the picture would be trading above 103 again to the upside.
Yes, indeed. 103, 103.70. I mean, we could see definitely space to the upside and continuation maybe to these targets, 107, 111. One thing that, let's see, one has to, I guess, always still keep an eye on, although it's a huge trend line, is maybe something like this, roughly speaking, could be still a resistance. So it would be good to break above these levels before we really can become a bit more bullish on the dollar yen.
What are the green dotted lines and the gold dotted lines? Moving averages?
Yeah, moving averages.
And what
definitely.
Are they?
I use actually fib numbers for my moving averages because, well, I guess I like fibs. I like fib sequences. Okay. Yeah, so even for moving averages, EMAs, close, I use fib numbers, 34 to be exact, we have on the chart now, and 144. So one is a bit of a more shorter term intermediate actually, and one the longer term direction. And often enough, if you have divergence between, for instance, tops or bottoms, currencies usually roughly, at least at minimum, you could expect the currency to go back about to the long-term moving average after divergence. It's a rough target, unless of course there's a bigger reversal.
Okay, so where's it coming in on the end now?
Let's see, we got, we do have weekly divergence.
Leave that chart, where's that come in? 92?
We got 92 indeed, 92.70.
Okay. So, I think you're the first person I've interviewed that uses fib moving averages. That's a pearl. So thanks for sharing that with us. And the two numbers again are what?
34 and 144.
Okay, and why did you select those?
Are those because of the fib? They're part of the fib
But
sequence
why this?
numbers.
But of all the fib
Oh, why those
numbers,
two particular of the
why
yes, I
these?
understand. Um, yeah, basically because I wanted to get a intermediate and more longer term one.
Okay.
I sometimes use an 8 or 13 is possible as well. I think that you could even use different combinations, maybe even a 2155 to get a bit more closer hovering of the moving averages. So there are definitely things that traders can combine and retinker to their like personal preferences, maybe. But I like the 144 because of the divergence target. In
Okay.
fact,
So, Admiral Markets, are they a broker? So,
yes,
you
they
want to
are.
tell us a little bit about Admiral and what you think the advantages are of people trading through them? And go ahead.
Yes, yes, definitely. Admiral Markets started about 12 years ago, I think, 15 years ago. They started in the Baltic, actually, in Europe, and they've been growing ever since. Very big company now. Uh, I mean, tremendous volume, and they have just great service, great spreads. So I'm very happy to trade with their spreads, their liquidity, and customer service. So that's one of the main reasons, obviously, that I chose them. It's always a difficult choice to make. It's an important choice to make as a forex trader, obviously, and so that's my story with them. And then I basically started with a webinar once a week, and this then slowly expanded to a webinar 3 times a week with the trading room and the wave analysis, basically.
Okay. And you obviously, I mean, people all over the world have a larger degree of choices than we do in the U.S. It's my guess that Admiral doesn't take clients from the U.S., correct?
I believe so.
Okay.
Yes, I'm not 100%
Yeah.
sure.
And where are they located? Are they in Prague as well?
They actually have. They're actually geographically speaking, they're the most diverse, widespread broker, is what I've found out. They have offices, I think, in roughly, I think it was, I forgot the exact number, maybe 50 locations, 50
Wow.
countries. It's quite geographically they're the most widespread, in fact. But their headquarters is in Estonia, which is in the EU.
Okay. Okay.
Yeah.
Any other markets that you'd like to cover before we wrap?
I think the CAD is was an interesting, the dollar CAD and other CADs. I think we do
And
see a trend continuation with those. So those I like trending currencies. I always try to focus on those the most, and I like the dollar CAD triangle that we had here. Um,
yeah.
Roughly speaking, like this, and that was an interesting, or maybe like this actually. That was an interesting bounce, an interesting contracting triangle. Triangles, in my opinion, are one of the better chart patterns to trade because they have just clear levels, they have clear stop losses, they have clear
Right.
targets, and we are pretty high. We're at a minus 618 target, so I wouldn't be surprised to see some consolidation maybe, and then another breakup. That could be an interesting scaling, for instance. So I'm definitely keeping an eye on this CAD weakness and see if it has muscle maybe to, if we look at the daily chart, to continue. For instance, if we measure this first move up here,
115.
it's about 600
Yeah.
pips. 600 pips.
Right.
And if we add those 600 to the base of the triangle, it's roughly about the minus 618 at 116 is the target. So for the dollar cat, another 350 pips would be a pretty big movement. It doesn't move that much.
Well,
So
lately it's been the star.
yeah,
You know, it's really changed.
indeed.
I mean, volatility is bigger in Canada than up until yesterday, the European currencies.
Yes,
Your
yes,
take on
indeed.
Aussie and Kiwi? Do you trade them?
Aussie, yep, definitely. Trade currency, only currencies, in fact, and all of these that we've looked at, also pound odd, euro odd, many crosses. I try to keep my primary focus is good momentum movements, so I don't want to be too bogged down towards a select group of currencies. Although if I had to choose one I know better, it's the pound, because when I was intraday trading it, it was the pound. And the Aussie, well, let me make this a bit blank so we can see it all better. I wouldn't be surprised to see some upside continuation still as yet to maybe the 50 fib or 61.8 actually at about 93.30, I think it is. Yes. Now, that could be a pretty choppy move before you get there. It's not moving that fluent as we speak, so it's not really trending nicely. The 4-hour chart is quite sideways, so when and how it can get there is a good question, but maybe we're getting close to some kind of support level as we speak, in fact, with this drop. Like
so
this.
based upon your take in the euro and and what you're seeing in Aussie, your view going into the end of the week is that this dollar rally that we had spurred on by the Fed could be faded.
Yes, looking at my overall analysis, it seems so indeed. If personally, I also took a trade, actually a bit longer term trade on the pound odd to the downside. So those are my two more longer term positions at the moment. But looking at this analysis, yes, yeah, indeed. Looking at the Aussie, I would say, start really a fundamental shift will be a break below these bottoms here.
Okay.
Below, I would say, what is it, 89? Yeah.
Okay.
Then things are looking a bit differently.
Okay.
Although, if I look at this this downside, it does look like 5 waves. In fact,
it's impulsive.
So,
as an Elliotician, would you consider that impulsive? So that kind of changes the picture.
Yep. It does. What we could see maybe is still an ABC correction here, and then we have to see how the next 5 waves down look like. Is it just an ABC correction, and this is just part of A, or is this actually part of a bigger reversal, and this is wave 1, for instance? That's the question.
Okay. Yeah. There's always a question, isn't there, Chris? There's always
there always is,
or.
There always is, definitely, especially with analysis. That's why with trading we need firm rules and have to gain and create our edge.
What's your most important rule?
I guess never to break it.
Okay.
But
what would that rule be that you should never break?
Well, with regard to the hourly, I'm always trading with the trend. So I'm always looking for swing trades with the trend.
And even though you're trading an hourly, is your definition of the trend on a longer term time frame?
Yes, I define it on the 4-hour and daily. In fact, both I'm looking for. Yeah.
Great rule. And great meeting you, Chris.
It was a pleasure.
Perhaps we could do this again down the road. And thank you for spending your time. To me, let me ask you this: what's your most valuable currency?
I like the euro odd a lot. I like the euro yen
Okay,
a lot.
well, my most valuable currency is time, because money
Oh,
comes and pips come and go, buddy, and time is gone
yes, that's true.
forever. Thank you for spending
That's true.
some of your most precious currency with us today.
Thank you so
All
much for
right,
having me.
nice meeting you. Good hunting, Chris.
You too.
All
Thank you
right,
so
bye-bye.
much. Bye bye.